Sorry we didn't get a good full...
Hey, what's up, guys? This is Taylor. It is the 27th of November, and we'll go on ahead here and jump into the weekly watch list for the week of November 28th. Creeping up on Christmas, guys. I gotta get my shopping done early this year. Every year I promise myself next year is the year that I start early. So, sure enough, you will catch me in your local mall on the 24th. But we'll jump in here, guys. So this, it's been a good weekend. Spent, Jesus, I don't even know how many hours. Spent a lot of time this weekend tweaking the big three signals. So I'll talk to you guys a little bit about that. Here's what I'm going to do. I'm going to run with the tweaked version of the signals for probably a month or 2 months. If I like the experience, what we'll do is I'll get together with Eric. Eventually, we'll probably push out an update. But for now, guys, this is, well, I can show you better than I can tell you. So the whole goal here of making the tweak to the signals, well, two goals really. One, I want to find my opportunities a little bit earlier, but I also want to make sure the signals are still consistent. So earlier signals, which of course leads to more opportunity, leads to bigger moves, which leads to bigger profits, but we got to keep that consistency factor. I don't want to make tweaks to the indicator here that just end up resulting in a bunch of false signals. So check this out, guys. To the left, we have a daily chart with the current Big 3 indicator. To the right, we got the tweaked version of the daily buy signals. So check out a few things here. Chevron, for example, over here with the tweaked version of the indicator, we start getting our buy signals pretty much exactly where you want them. Right there at that daily 21 EMA around 155. The current version of the indicator doesn't start to print that buy signal until, here's the thing, guys. Does it look like much? Not really. Doesn't look like we're that late to the party. But that is a considerable difference. The new signal gets you in around 155. The current version doesn't flip bullish until we're up here around 168. You're leaving some good cashola on the table. Next example is ABBV. The current version prints a buy signal back here, right near that daily 21 EMA. You got a huge push. The current version never even gives you a buy signal. MRK. On the tweaked version, MRK goes bullish down here around 92. The current Big 3 doesn't go bullish until all the way up here around $100. Once again, late to the party. Pepsi, another good example. Pepsi gives you the buy signals back here. Get a pretty good pop out of it. The current version doesn't give you any buy signals at all. BMY. Huge push. During that push, the tweaked version goes bullish. So that dip to your 21 EMA, there's the entry. But on the current version, you got no buy signals. Johnny Deere, tweaked version goes bullish right here. The current version doesn't go bullish until you're crossing through like $410. The tweaked version goes bullish around 377. Current version doesn't go bullish until you're up here around 410. Late to the party. ADP. The current version gives you no buy signal at all. The tweaked version gets you long exactly where you want to be long. Then you get your big rip. TJ Maxx. Bullish on the tweaked version. Doesn't go bullish on the current version until you're up here around $80. So the point being, guys, with the tweak here, again, still the same consistency as far as the reliability of the signals, but we're getting those signals so much earlier. And in a nutshell, what I did was, the Big 3 indicator is a combination of structure criteria mixed with momentum criteria. The tweak that I made here was the momentum criteria. Removed one of the momentum ingredients, swapped it out for a brand new momentum ingredient. And as a result, we're finding that bullish structure, but we're getting our buy signals so much earlier. So, like I mentioned, guys, I'm gonna run with the tweaks here for a couple of months. If I like the results, we'll push an update eventually, and maybe for those of you who don't have the indicator, maybe another class will be in session. But for those of you in the mastery, we covered all this today. So for you mastery folks, Gave you guys a couple of scans, gave you a couple of free indicators that should help you mirror, the tweaked version of the buy signals here. So I wanted to cover that, guys. I'm super pumped. And this just goes to show you, no matter how long you've been trading, whether or not you have your own indicators, never stop looking to get better, right? Never stop looking to improve your process. This one little tweak, and I'm serious when I say this one tweak, I think puts me in a great position for 2023 to be the best trading year of my career. So I'll keep you guys posted, but with the tweaked version here, got a couple of good setups to show you. So for starters, guys, real quick here, quick look at Mamacita Market. At the moment, I still think the market's got a pretty good chance to trade higher into the end of the year. So I'm not seeing any warning signs just yet. On the S&Ps here, we got the weekly chart, the 3-day chart, and we have the daily chart. So my ultimate target here, guys, is the weekly 50 around 4150, 4200. Structure and momentum on the 3-day chart starts to improve. Structure and momentum improves on the daily chart. Check out the weekly MACD. Focus really closely on this for the next few weeks here. If you get that positive cross, green above red on the weekly MACD, I think that'd be a huge source of confirmation. We do want to look to be long this market. At the same token, guys, in the absence of that positive cross on the weekly MACD, that would kind of suggest this is just a rally and not a reversal. So look at all these previous rallies. Price action goes higher. Momentum on the MACD continues to go lower. In other words, the MACD indicator is basically calling bullshit on each of those rallies. Now look at your Dow Jones as an example here, or a comparison rather. The Dowski finally gets that positive momentum shift on the weekly MACD. So of course it could all fall apart this week, right? But the point being, that was a rally, that was a rally, and that was a rally. None of them actually reversed your weekly downtrend. But now that you're back above the weekly 50, trading at or slightly above the previous swing high, and your weekly MACD crosses positively, it's a potential heads up. You might actually be seeing the beginnings of a true reversal, a shift of the trend, versus just another bear market rally. So take that, that signal as like the template of what I think you want to see here on the S&Ps and the QQQ. Couple of weekly positive crosses. More confirmation we're trying to play this bad boy to the upside. Quick look at the dollar. No problems here just yet, guys. So remember, the correlation is weakness in the dollar is good for mama market. So the Dixie, on the daily chart, big break in structure and a big break in momentum. The 3-day chart has a break in structure and momentum. Under the 21 EMA, under the 50, negative MACD cross. But most importantly, guys, on the weekly chart, we have the first negative MACD cross in the Dixie since the market bottomed all the way back here post-COVID. Let me go find that signal. There she blows. So the last time the dollar put in a meaningful high, and you got that MACD cross, was back here in June of 2020. Right around the same time the equities market put in a bottom and started a crazy-ass rally to the upside. So that's an important signal here. Right? Every dip, every pullback you've seen in the Dixie up to this point has been exactly that. It's been a dip and it's been a pullback inside of a really bullish trend. That's the first potential heads up in quite a while. You might actually be getting a reversal as opposed to just a dip. A big reversal here in that bullish trend would be great for the market. So that is an important MACD cross. Next up, guys, HYG. And the correlation here, of course, strength in HYG is good for the equities market. So ideally, you get a huge dump in the dollar, you get a huge rip in HYG, and if you're bullish this market, should put you in pretty good shape. So HYG here. First up, guys, quick look at the daily chart. Let me grab me drawing tools. But the daily chart looks pretty solid. We got a squeeze. 21 EMA above the 50. And momentum went positive on the MACD back here in late October. So first momentum shifts, then the structure shifts. So that checks out. Positive MACD cross on the 3-day chart. Again, the weekly, that's where you really want to see that positive cross. So throw that to your watch list. Positive crosses on the weekly MACD for HYG, SPX, and QQQ. I think you see the market back towards that weekly 50 SMA, if those things take place. If you don't get that positive MACD cross on the weekly charts for HYG, SPX, and QQQ, it doesn't mean the move can't continue, but in the back of our minds, we should be prepared for that move at some point to find resistance and roll right back over. Where this all turns into a sustainable rally, or again, a true reversal, is if you're getting those positive crosses on your weekly momentum. But for now, guys, no warning signs as far as HYG goes. Looks a little bit better here for the bulls as the days go by. No warning signs for the Dixie. And as far as Mamacita S&Ps go, no real warning signs here until we're back under that daily 21 EMA. So for now, I think it all shapes up, gives the bulls a pretty good shot at a push back up towards that weekly 50, taking SPX around 4150, 4200. So as always, guys, we'll keep on updating on all of that. But as far as a few setups here, I've got 4 or 5 I want to share with you tonight. And on the weekly chart, the 3-day chart, and the daily chart, I've got the tweaked version of our buy signal. So first up here is ADM, Archer Daniels. So we're actually long this one right now in the Mastery and the options room. So for ADM, guys, let me grab my drawing tool. I happen to think I look a lot cooler when I use the drawing tool. So bear with me here. But this is the combo. The big 3 of the big 3. Daily chart. Oh, hold on, here comes the drawing tool. Alright. There we go. Okay, daily chart. Squeeze plus a buy signal. Structure and momentum is bullish. And you got that compression with the squeeze. So that all checks out. The 3-day chart. You've got a squeeze that's currently firing long. And you got the buy signal. The weekly chart, you've also got a fresh buy signal and a fresh MACD cross. So from time frame to time frame, you have compression, you have structure, and you have momentum. And that pretty green arrow suggests path of least resistance is to the upside. So for ADM here, guys, I think it's valid to continue to buy all the way back down towards that daily 21 EMA. And for now, we're going to work a target of a push towards 100 bucks. If it breaks through 100, that'd be a brand new all-time high. So in other words, there's nothing to stop it. So you get through 100, you could be seeing, 104, 105. But your weekly chart, your 3-day chart, and the daily chart, they're pumping out that buy signal. This looks good for higher prices. All right, next up, guys, is ENPH, Enphase. Let me get rid of that sun. All right, ENPH. Daily chart. Squeeze plus the buy signal. The 3-day chart. Squeeze plus the buy signal. And on the weekly chart, squeeze plus the buy signal. Structure, momentum, and compression from time frame to time frame. So 3 big time frame squeezes, and the indicator suggests probabilities are in favor of that squeeze firing to the upside. So right now we don't have a position in EMPH, but believe me when I tell you, any dip this week back towards 300-ish, probably looking to buy some end of December, early January expiration calls. I am liking EMPH, guys. No position just yet. So we got ADM, we've got EMPH. Next up here is BTU, British Thermal Units. So for this bad boy, daily buy signal, 3-day squeeze with a fresh buy signal. The only thing missing right now, and you might get it this week, is a buy signal inside of that weekly squeeze. That's kind of the trio that I'm looking for. Weekly squeeze, 3-day squeeze, daily squeeze, all printing buy signals. So this week, guys, watch your MACD. And the MACD settings are 21, 34, 34 exponential. If we can get a positive cross on the weekly, then ideally I'm trying to build my position, looking for that weekly squeeze to fire long, which should take BTU back towards these previous highs around 32.50. The key, of course, is I don't want to chase it. So tomorrow morning, if we gap up to 32 bucks, yeah, you're probably going to get that positive cross on the weekly MACD, but I'm not going to chase an entry up here. Ideally, everything's already aligned. You got your weekly, your 3-day, your daily, but you're trying to take that entry as close to that daily 21 EMA as possible. So that tweak that I made to the indicator here, again, the power is it gets you in so much earlier. My daily chart tells me to get long back here around 26 bucks. If I can get long at 26, guess what? By the time this is pushing towards a breakout level, never mind actually breaking out, but just actually trading back up into that breakout level, you're already sitting on a handsome profit. So BTU shapes up pretty good. Next up, guys, is Dollar General. Check out this puppy. Woo Nelly. Woo Nelly. Daily chart. We got earnings coming up. Got to keep that in mind. Good old earnings coming up. But regardless, daily chart. Squeeze plus the buy signal. 3-day chart. Squeeze plus the buy signal. And the weekly, you got the same combo. Alright, that's the triple threat. The big 3 triple threat. Squeezes, structure, and momentum across 3 larger time frames. So for now, guys, this all looks pretty poised, I think, to take out the top here and break out above 262 and change. If this trades anywhere near that daily 21 EMA early this week, I, for one, would like to take an entry. Alright, so Dollar General, BTU, ENPH, ADM, and I'll give you guys one more here tonight. Let me look at my notes. Let me give you one more good one for tonight. Drum roll, please. I'm going to leave you with Celsius. C-E-L-H. Check this one out. Daily squeeze with a buy signal. We don't quite have the buy signal on the 3-day chart just yet, but check out the weekly. That's a thing of beauty. Beautiful push to the upside. Reversion to the mean. Prints a brand new weekly squeeze. And you got your buy signal still printing. So that all looks good for a move back towards 120-ish. So there you have it, guys. Celsius, Dollar General, ENPH, BTU, and ADM. They've all got the alignment as far as momentum and structure and squeezes across what I think are 3 pretty important bigger time frames. The weekly, the 3-day, and the daily. So that's the watch list for this week, along with a couple other names that came up on the scan results. But all in all here, guys, I'm pretty pumped. Alright, never stop trying to get better. Never stop looking to make tweaks and improvements to your strategy, your execution, and in this case, to your signals. So I'll keep you all posted. And again, like I mentioned earlier, there's not going to be any update. As far as the current Big 3 indicator goes, give me a month or 2 months to play around with this. I'll document all the results. If I'm happy with it, then we'll do an official update on the indicator. And as always, guys, I'll keep you posted on all of that good stuff. But that's all I got for you guys tonight. As always, I hope you found it helpful. If you haven't already, go on ahead and tickle the subscribe button. And I'll see you guys tomorrow morning for pre-market prep. Have a great night, y'all. Adios.